America doesn't bail out the losers. America was built by bailing out winners, by rigging a nation of the winners, for the winners, by the winners. You go to church, Nash? You go to church?
Sure.
Only 1 in 100 is going to get on that ark, son. And every other poor soul is going to drown. I'm not going to drown.
What is going on YouTube? It's Brendan from Market Makers. You guys have no idea how much of a struggle this has been today with the software. It keeps crashing. We lost a couple of videos, but I'm putting this out there even though it's later in the day for you guys. It is 3:30 Eastern time right now because tomorrow is a pivotal day. It is a CPI Tuesday. We get the CPI print. And guys, I spent some time this past weekend looking at the different YouTube TA people. A lot of times you guys suggest, what do I think of this person? What do I think of this person? And one thing I notice is the vast majority of them are very bullish about the market right now, meaning the vast majority of them are expecting a new all-time high, the Santa Claus rally. Now, you guys watching this channel know that is not my base case. So today's video is going to be really technical, looking at the levels that have to be taken out here on the charts and what my expectations are for this market rally, because you guys know I trade with natural law. I trade based on the cycles, and we are in a recessionary cycle, experiencing a recessionary rally, but there's digital footprints in this cycle of previous cycles. I want to share those with you today because they are very, very important. You guys saw the intro. You need to understand what's happening. This market is as much political as it is corrupt, as it is manipulated. You need to understand this. Powell was dovish last time because Powell wants to prop up the markets, because here in the USA, next year, 2024, is an election for the president. So he was dovish. The markets are simulated to be propped up, but does it show that in the technicals? And the reason he wants the markets propped up is because who are the big elite donors? The Wall Street class. I don't want to get off on a rant here, guys, but you need to understand the Wall Street class are the donors to the big parties, okay? Doesn't matter who puts the Fed head in. They always try to keep the market afloat. Now, we happen to be in a recessionary cycle, so underneath this veneer of the market being strong, underneath that veneer is the actual economy crumbling. Last video, we went over the Darter rule for unemployment. Unemployment going up 0.5% in a 9-month window from the trough of 3.4%. Always has signified through all 12 recessionary cycles has signified either a business peak or the beginning of the recession. We talked about the Psalm rule that hasn't quite triggered yet, but again, 100% success rate, same as the Darter rule for unemployment signaling a recession. So understand where you are in the market. It doesn't mean we can't get rallies, doesn't mean these rallies couldn't make a new all-time high, but until you take out that all-time high, you are in a battle-tested bear market. And if you understand that, it's going to help you trade this market. So guys, put your thinking hats on. We have a show for you today. Lee, let's start the show.
Take your pick. Either way, you lost. But I made more money during the crash than before it. You can too. You just got to stop lying to yourself and ask, what did you do wrong that your family lives in a motel?
There's going to be so much money to be made in this market, guys, on the downturn, because on this channel, we don't care about feelings. We care about facts. And the market with its digital footprint, we're going to go over that right now here on the channel. Guys, so there's a key divergence cycle that you need to understand that happened in every single major bubble in the marketplace. It happened in 1929, 1972, .com, and it's happening now. It already happened now. You may have heard this expression if you listen to Bloomberg or watch CNBC. Every now and then you'll get an economist or an analyst on and they'll say the small caps lead the large caps. There's a key divergence cycle that happens in these bubble cycles that you need to be aware of. On my screen is the Russell. Now, my base case, I'm going to build this case for you why I don't expect a new all-time high. And I could be wrong, guys, but I want to build my base case for you so you can understand these facts, because you won't get these on other people's pods. They don't know the facts, and or they're not sharing them with you. Look on my screen. Here's your pandemic low on the Russell. This is the small caps. This is your regional banks. This is your meme stocks. This is your junk companies. This is your companies that have a lot of debt, that require lines of credit, and that require interest rates to be low, or they start to crater. Okay. Think Peloton as an example. You have your pandemic, you have trillions and trillions in stimulus. Now, in all these bubbles, this divergent cycle is the same. It's very rare to have this divergent cycle. The small caps fly up. They fly up until February 2021, where they start consolidating and going sideways. Okay, they go sideways. They make their all-time high in November of 2021. When they make their all-time high, they start selling off and breaking down. Small caps leading the large caps. What did the S&P do, guys? The S&P went up until January 4th. The mega caps kept rising as the Nasdaq, Bitcoin, and the Russell 2000 all made their all-time highs in November of 2021. And keep in mind, a lot of people don't know this, the Russell and Bitcoin made their co-equal all-time high within 72 hours of each other. Now, this is important to focus on. Let me go ahead and zoom in here so you guys can understand what we're looking at. The small caps, my thesis is, my core base here is, the small caps need to have a massive rally in order for the all-time high to be taken out. Why do I say that? Because right now, let's go ahead and measure this. From your all-time high, you had the small caps come down, I think about 33%, I want to say. Let's go ahead and look at this to your market low here, 33.59, Dow retracement, right? Look at this. I want you to understand this. So when the market sold off all through 2022, the market sold off, right? When you got down to these fractal lows, the S&P was at 3,500. Bitcoin was at 15.5. You actually took out the low here on the small caps. You took out the low and made a new low, yet the S&P is up at 44.16, 44.20. Bitcoin's at 36, 37, 38K. And the small caps are telling you, hey, guys, the underlying economy is very weak. We know this from the ISM number, which is manufacturing back at the pandemic lows. We know we just had a Q3 GDP of 5%. The Fed is predicting a 75% drop off down to 2%. We know the UK's GDP for Q3 just printed. It just printed at 0%, guys, 0%. This is not a United States problem. It's a global problem, much like the GFC. So the small caps need to rally big time to get out of this funk. And I know everybody talks about the seasonals. And what are seasonals really, guys? They're just market cycles, but they don't want to use terms like equinox and solstice. So they say the seasonals, this is the strongest seasonals. But I want you to understand something. You know what else was the strongest seasonals? The same exact time frame. November, when the Russell peaked back in 2021, November 8th. That was your strongest time frame, and look what the market did. The Russell fell 33%, the Nasdaq fell 34%, and the S&P fell 24% in the same exact seasonal time frame. So we have this key catalyst coming tomorrow, which is the CPI. We're going to talk about that, guys, because that's going to give you all you need to know for the short term here. And if you look at the Russell, what the Russell needs to do, it has its M pattern forming here. You see the Russell, you have your M pattern forming, but this is only going to take you up to about 1830 here on a target projection of this M, okay? It's going to get this projection, 1830 at the 1618. So that gives you your W, and I think this is going to top out right at your 200 at 1830. You see that? That's going to be your top. So what would that correlate to with the S&P? Well, that could be 4,500 on the S&P. We have to go look at the charts, but I want you guys to see this because this is really key for the markets. The overall health of the market is not healthy. You have a weighting in the marketplace. We're going to look at this on the RSP. You have a weighting in the marketplace. In the S&P, the top 10 companies are 34% of the S&P. So basically the AI companies and the mega cap tech, if they rally, the market rallies. But when you look at the RSP, this is an equal weighted ETF. All the companies are valued the same. Look at this drop you have on the RSP. You're below the 50. You're below the 200. You have a death cross. You have a death cross on the Russell. You're about to get a death cross on the Dow. As you guys know, you can rally in a death crosses. You can rally above them, but ultimately the markets will capitulate to the death cross. And you haven't even come up to any substantial level here from your rally high in July. Look at this. From your rally high in July, you're below the 382 retracement. So keep this in mind, because only 1/3 of companies, actually 37% of companies in the S&P, are trading above the 200-day moving average. So I think we can go up higher. I don't envision us taking out the 4,600 level, but let's look at the key catalyst. The key catalyst is your CPI. And the last CPI print was 3.7. And right now it's supposed to be 3.28. We find out tomorrow at 8:30 a.m. Eastern time. This is your short-term catalyst. Guess what, guys? That number comes in low like that, you're going to have a rally. That number comes in high or hot, you're going to have the market sell off. It's that binary, and you need to be aware of it. Let's go ahead and move forward. Let's look at this for our boom pattern. So where can we take out the all-time high on the S&P? We're looking at a 3-week chart. We're looking at the log setting. Here's our pivot, guys. You see the pivot? There's your fractal high, 4607. You have to take 4607. That will give you this target right here on my screen. Here's your all-time high. Here's your market low. And now you have your pivot here. If you can take out that pivot at 4,600, that gives you 45 or 49.18, crushing your previous all-time high. And we have precedent for this. Bitcoin did this move. The CAC did this move, as well as the DAX did this move. I don't think we have the momentum. I don't think we have the participation. The equal weight looks horrible. The Russell looks horrible, putting in a new market low. So I don't think we're going to take out that 4,600. What I think is going to happen is we're going to come up to 4,500 with a lower CPI. And if the CPI is hot, we're going to dump. But we're going to come up to 4,500 or just above. And I think you're going to get this pattern that we've talked about so many times, is just printing a double top here, okay? Printing a double top just like you did at your previous high, almost at the exact same retracement level. And keep in mind, what is this pattern really? The whole pattern is a massive double top, okay? That's what the whole pattern is. And when you take out your market low, when price comes down and descends, and you take out that market low, that's when you start going to look at new lows. And remember the historical norms. Care about facts, not feelings. Historical norms in a recession, which again is my base case, a severe recession nonetheless. But even in a run-of-the-mill recession, the S&P will take out its low. It has never put in a bottom before a recession in stock market history. And the average recessionary drawdown is 33%, putting you at 3,200 on the S&P. So we get this lower CPI. Watch 4,500, see if it holds up. If you can take it out, you need to flip 4,600. You take out 4,600, you have a pathway to a new all-time high. You don't take out 4,600, you're not getting that new all-time high. Let's move forward. Here on the Dow, look at this. You almost have right here, you almost have your death cross already, as you can see. So you almost have that death cross. The Dow's rallying up as well. Let's pull all of our fibs the same way. Let's do it together. Pull it from the rally high to your correction low. 34,406 is what you're bouncing off of, this 618. Look at that. This is your baby S&P. Remember, 30 companies plucked from the S&P, every single sector. Good mirror image. Could this rally higher for low CPI? Sure. What's my most likely next target? The 786, 34,975, where I'll be looking for a topping structure to continue with my core thesis that the market's going to roll over, okay? And for this to flip and have the higher targets, guys, you have to look at this fractal, 35,701. If the S&P flips 4,600, if the Dow flips 35,701, then you have an upside target, 36,622, 37,795, taking out your all-time high. Let's move forward. Lee, I got to get esoteric on these people.
I will consult the bones. The bones tell me nothing.
Guys, here's our fractal pattern. This is part of my thesis as why we're not getting that all-time high. We're looking at market geometry. We're looking at market symmetry. We're looking at an ABC move, a law of three pattern as a natural trader, 201 bars from your all-time high to your market low, 203 bars to the rally high, giving you that symmetry, 202 bars for that final C leg takes you down to a market bottom, May 2024. Unless you take out 4,600 right here, you're just coming up for a large double top pattern to break down. Okay. That's my core basis. And of course, we're going to look at this and track this as it goes along. Tomorrow is going to be a massive catalyst, so pay attention to your charts. Let's go ahead and move forward. Looking at our lunar cycles, everybody's going to be using lunar cycles and moon phases on future charts. If indeed tomorrow the CPI is hot, and we have the new moon, which has given us tops and tradable tops. Here we have the 43.82 short that I shared with you guys, 300 bar drop, new moon as well. And then, of course, we had the eclipse, which gave us the exact bottom, rally candle up. Now we have our new moon, guys, and you can see the previous tops here from the new moon, from the full moon, going all the way back to the all-time high. I'm going to make another video, guys, going over the lunar cycles and the solar cycles together to give it a standalone reference video you guys can come back to and find. I know everybody wants to see it, but if I bury it in these videos, nobody goes back to watch just that one segment in the video. So we'll make it a standalone video. The Petz crash cycle, another key esoteric crash cycle. Steve Petz, mathematician, wrote a book on cycles. He dedicated a chapter to markets, studied 8 cycles. He said when you have the preconditions of being in a bubble, he studied 8 market crashes. You have this pattern that forms. You have a solar eclipse, which we had on October 14th, the Ring of Fire eclipse, followed by a lunar eclipse, which we had here right at Halloween. Here's your lunar eclipse. And then we had the rally. He said by the time you get to the next full moon, so we have the new moon right here, the next full moon is November 27th, you should be building a top, and then you would have, if the cycle plays out, 2 to 4 weeks of hardcore selling. That's if the Petz cycle plays out. Be really interesting to see if it does. Right now, what we have is a potential top with a hot CPI. Market would come down, and then I think the market would come back up. November 27th would be that final top, and this would look exactly like it did over here. You see this exact situation with the moon phases reverse. But if that CPI comes in lower as predicted, then this is really nothing more than a pivot to a little bit more upside. Then we have to watch November 27th as well from a timing perspective. Let's go ahead to a tradable chart on the S&P. What does this mean? You have the 50, you got above it, the 200's below you. They're still intersecting here unless the S&P can really gain a lot of strength. Remember, these markets can rally in the death crosses, before the death cross and after the death cross. But when they get caught up in the death cross and the cycle continues down, you get capitulation. Okay. And that will be your big move down. So we have, let's go ahead and pull this. We are right at the 618. Look at that. 44.16. The price right now at this time of recording is 44.16. Everything's depending on tomorrow. So again, my base case, low CPI. If we get more euphoria, 4,500, which right here is a 786, 4,501, looking at a key law of three pattern to see if we double top out, okay? It's going to be really key to see if this resistance holds, because if it doesn't, you're coming up to test your fractal at 4609, and if you flip that, you're going to a new all-time high. Now, what does the volume look like on this? And this is something, as everybody knows that watches this channel, as a student of Wyckoff, the original Wyckoff, and volume spread analysis as well. Look at the volume. These green bars signify normal volume. The gray bars are below average trend. And then I have sigma colorations for standard deviations above trend. This volume has been down left to right this whole rally up. Look how below average this volume is. This is fewer participants, a FOMO rally paying higher prices. It doesn't mean it can't go up. FOMO rallies can drive the market up, but to me, it signifies an incoming top, okay? Very key to understand, because in a healthy rally, you want strong breakup volume. And remember, prior to this having its first down day the other day, prior to that, this was the strongest rally in 2 years on the S&P, the strongest rally. And it was only a day or two away from being a multi-decade strong rally as far as percentage terms and gains, okay? So this is an extremely strong rally with declining volume. key pivotal event, I'm going to look for that euphoric breakout. Watch 45.01 on your charts. And obviously, if it's a hot number and the market dumps, watch 43.50 because that's right above your 50-day moving average. And then watch 42.97. We'll see how that CPI comes out. Nobody knows. Actually, I take that back. Wall Street knows. Just watch the charts a few minutes before the number comes out. You'll know which way the market's breaking. It's amazing how they just managed to guess it correctly. What does this mean for Bitcoin, guys? Bitcoin gave you this great trade here, 31.8 on the diamond breakout. It's 20% up move here. Bitcoin right now, just like everything else, is consolidating at a higher level. I've had this target 39K, updated to 41K. I've had this target at 39K since June, guys. Remember my video with the equal length waves I was showing you? Forgot to load the chart. But that was the video. And this, again, if we go to the 4,500 on the S&P, and obviously if we go higher, but I think you're getting this number. I think you're getting 41K, Bitcoin at 36.8. And again, I think this is an area you want to be watching for topping action and confluence with the markets, okay? Very important, has to be in confluence with the markets. At some point, the markets are going to pull back. Even if they rally up 85 points to 4,500, you will have a sharp pullback. How it handles that pullback, and we don't have candles yet, how it handles that pullback will determine if you're going to take out your all-time high or not, okay? If it just makes the top and starts breaking down, we're going to see the patterns that play out. I'm going to share those with you. But Bitcoin being between the 1618, which again, multiple trading opportunities available here. So there's a really clear resistance line. Bitcoin being between 1618 and the 2618, I would just be waiting to see on the CPI and see how the markets react. That is tomorrow, once again, 8:30 a.m. Eastern. And remember, Bitcoin's been lagging. Bitcoin started going sideways in March of 2023, and it didn't start breaking out until October 23rd. It really broke out here the same day I gave you that trade, right? So meanwhile, while Bitcoin was going sideways, the S&P rallied up to 4,600, corrected 11%, and now it's trying to rally back up. And Bitcoin is just now breaking out to the upside. So pay attention to confluence with the larger markets, because when they sell off, it's trillions of dollars. And if they rally, you're going to see Bitcoin, I believe, come up and try to take out that 41K. Could it be a little bit lower at my original 39K target? It could, but just watch this area, okay? It's going to be really important, and we'll talk about it on Thursday's update as well when we see the market's reaction. Let's go ahead and look at the Nasdaq. What's your boom pattern on the Nasdaq? It's going to look very similar to what you just had on the S&P. Your fractal high is 15,937. You have to take out 15,937 to have more upside and take out that all-time high. And our W target, guys, is going to be 17,098, okay? And it gives you this pattern, this X5 Fibonacci pattern that you form based off this pivot here, okay? This is the same pattern that you see on the S&P, and this is what I'm looking at here. So this would be your boom pattern, taking out that fractal high, 15,937, 17,098, and again, this takes out your previous all-time high. What do I think is likely to happen? We have to pull a different fib here for this, or get rid of this pattern, I mean. You're at the 786 now. Let's zoom in so you can see this. You're at the 786. We're on a three-week chart here. You're at the 786. If the S&P goes up 85 points, you could easily see this come up for a co-equal high here on this double top structure, right? You could see something like this. So 15,937, you need to see if this fractal holds 15,937. This is going to be really important, and it's going to be important in confluence with what the S&P is doing, because remember, it's the mega cap tech. The Nasdaq's loaded with them. It's the mega cap tech that's driving the rally. 90% of the gains are from 10% or from 10 companies in the marketplace. Really key to understand that, because they're going to top at some point, but you can continue to have strong upward movement as long as money flows into this. You got money managers chasing this rally, retail chasing this rally. So watch this in confluence with the S&P. You're at key resistance 15,536, and you're at 15,500 right now. So you're right up against that 786, which for weeks has been your top. And this wants to break, okay? This wants to break with a low CPI. Then you got to look at 15,900 and see if this wants to lead the market up higher. Let's go ahead and move forward. The FTSE, what does that mean for the FTSE? The FTSE, you have your W as well. See your W pattern here. You have your W on the FTSE, and your key resistance levels remain the same. You're right at 74.33. I would look to see if the U.S. markets break out. You got to take out this fractal at this level 74.80. I'd be looking at the 618 75.39, and in a super bullish FTSE, which again, you just got a 0% growth on your GDP, 0.0. But in a super bullish FTSE, watch the 786 at 76.14 combating the 200. I believe that would be your top, and it may as well die somewhere underneath this as well, because you already had that big run up that the US markets didn't quite have yet on that second influx. Okay. The French 40 had multiple all-time highs as well. So I would look for the same thing. French 40 has to take out the 71.58 level. Let's go ahead and grab this from a high here, a fractal high. You can see that you got up to 71.28. You want to see if you can come up to this 72.31 here on this 618, which puts you just underneath the 200. You're above the 50. I'm inclined to think this is going to be your trading range between 7,094, 72.50. Let's call it where the 200 is. I'm inclined to think this is your trading range, a reflexive rally here off of a W pattern. Okay. I think that's what your trading range is going to be. We shall see how this progresses. Guys, let's go ahead and look at this as well. Looking at where are we at? The DAX. The DAX, I have the same patterns playing out here on the DAX, guys. We got the DAX. Let's pull this down. DAX just above the 382. Again, you above the 50, below the 200. So your trading range to me is the 618 at 15,787 from where you are. Again, bullish US markets. Watch the DAX. See if you can take out the 200 at 15,653. That's going to be a struggle. Maybe you get some wicks up here at 15,787. The DAX is at 15,356. And if the US markets roll with a hot inflation, guys, then look for DAX to top out and start rolling down with the US markets. Again, everything's reflexively rallying based off the US markets. Tesla, the key areas we're watching here, guys, this is going to be your gap filled 242. If you can get this W to come up to 242, and if it can get above that, key resistance at 249. It's my bullish targets here for Tesla. If we get this rally, you flip 249, you can have more upside, and we can talk about that on Thursday if we start getting some more candles here to show us what the market wants to do. This is such a binary direction. We don't need to get ahead of ourselves here. Ferrari race, this thing is off to the races, pun intended. And you look at your W pattern, it's been beautiful, hung up at 342. Low CPI, look for this to go to 357. Okay, that's my 1618, where I'm going to be looking for a top on Ferrari in confluence with the other markets topping as well. And what do we have for Adobe? Adobe, we have this great W pattern as well. Why are we tracking Adobe? It's an AI play, and it's up 120% from its lows. And if we go ahead and look at Adobe here on a W, 616. Now remember, I identified 608 and 616 because 608 is the 786 from the high on Adobe, okay? But we're hung up at the 592, low CPI. I think you're getting that 608 to 616. We'll watch this level and look for a 3-wave or a 5-wave pattern to print and to trade going into this recession, going into this Q4 print of the GDP supposedly slowing down by 75%. So we shall see how that plays out. One last one, NVIDIA. Everybody wants to see this. So NVIDIA. Guys, I got a special treat for you, by the way. If my phone's correct, I have a message from Ray Daly. I'll play that for you here at the end of the video as well. So let's go ahead and look at this. So NVIDIA, again, your classic W pattern. You have your W pattern. You got above the 50. You got above the 50, you're above the 200. And if you get the low CPI, you got to take out 502, guys. You take out 502, you're going to 527 in harmonic expansion. You're at 486 right now. And again, if we get that rally, I'm looking for this rally to continue going to about November 27th. And then we'll see what happens there. All right, guys, next video will be Thursday. Lee, I don't have time to check this Dalio voicemail. Go ahead and throw it up on the screen for everybody. Peace, everybody. Talk to you Thursday.
Hello, Brendan. This is the real Ray Dalio. I just want to say, you are doing a good job being our hedge fund plant. Remember, we need you to mislead retail so we can steal their money. Our plan is working. Soon we will have all the monies.